Yeah, baby. Howdy, folks. Hello, hello, hello. If you're not making some money today, I don't know what the heck to tell you. You got to make some money, okay? So, let me start pulling everything up here, folks. Let me get it all up and rolling. We got a lot to go through. Palantir, Shopify, so many stocks making big moves. We're going to talk about PayPal, the move there. Apple earnings after the bell, along with Coinbase, Starbucks, and a few others. Obviously, Apple's going to move the entire stock market. Push in the flapjacks. Push them on in, baby. Let's go. It's a good day. It's a good day to be a Palantir bull, baby. It was about $17,000 up today on good old Palantir. My dear, I love you. Give me a beer. But even more importantly is this right here. Palantir's income statement. I just finally, by the way, I was up till 2 a.m. last night, guys. Listen to freaking conference calls. I listened to back to back conference calls last night. And that was after I did that 3-hour live stream with you guys, did a reaction video on the reaction channel, plus did a video on the main channel, plus had family time, plus did a workout. It was a busy day yesterday. Holy smokers, that was no jokers. But anyways, so this, I just literally got a chance to check out the numbers. These are freaking, this is an A+ income statement out of Palantir here. Revenue up to $558 million from $477 in the same quarter last year. Cost of revenue stayed basically almost flatlined. Like, that's incredible. It was up very slightly, which means your gross profit's going to explode higher, which is exactly what happened. Gross profit, $450 million gross profit versus $370 million in the same quarter last year. Sales and marketing, they actually dropped. Sales and marketing expense year over year. That's impressive. Research and development, R&D, was up about $5 million. I gave that a blue because, you know, R&D, it's always good to spend there. That's the future of your company, right? Especially as a tech company. G&A, down $20 million year over year. Like, well, freaking done, Palantir. Holy smokes. And total operating expenses came in at $410 million versus $432 in the same quarter last year. That's extremely impressive. That means your income from operations is going to blow up. And sure enough, income from operations was right under $40 million for the company. That's versus a $62 million loss in the same quarter last year. Like, talk about a difference year over year, right? And then interest income on top of that was nearly $37 million. Income before income taxes came in at around $80 million, folks. Net income, $73 million. I mean, my gosh, what a change year over year. I mean, the change year over year has been almost shocking in regards to Palantir, in regards to where this company was financially a year ago versus where this company is today. I mean, it's a night and day difference. You know, you look at where this company was at this time last year, $123 million net loss. Net loss last year in the same quarter. And to now be at a $73 million profit and to make up that ground in a 12-month span is, I don't know, almost borderline miracle. Almost borderline miracle, folks. Holy cow, that is dang impressive. I want to hear what they're saying about Apple. Apple earnings are right after the bell.
Not necessarily as bullish as Dan, and it sounds like Joe T is as well, near term on Apple, right? This is not a trade for me. This is one my kid will probably inherit, so I'm long-term bullish on Apple.
Oh.
But in the next 12 months, I think they have some work to do. I think they have not necessarily just a China problem, but I think they have an iPhone problem in the sense that they have to diversify away from 50+% of their product mix, of their revenue mix, being the iPhone.
That's true.
To me is one of the biggest existential threats to Apple.
Yeah, you know, market's having a great day. Dow's up 500+ points. We're about to go through stocks here. Having a phenomenal time. If there is one stock that could throw cold water on the whole freaking market and take our fire out from underneath us, it is Apple. It is Apple. If there's one stock that could ruin it all for us, folks, it is Apple. So, we'll see. I almost kind of rooting for Apple because, you know, the market's starting to get a little in our advantage here. So, my gosh, there's moves all over the place. Palantir, my dear, 20% plus mover. Fubo's moving big. Their earnings come out in the morning. Yeah, be ready. I think their subscriber numbers are going to be pretty freaking good. That guide's going to be pretty freaking good. And we'll see what happens with the stock tomorrow. But, yeah, it's pretty exciting times. We got PayPal stock making a 6%, about 6.5% move. As I told you guys in regards to PayPal, I see a gradual nice recovery for PayPal over the next 2 years, essentially. I don't expect it to be up in a straight line. I think you're going to have some nice moments where the stock's just kind of rolling. I think you have some moments where the stock's kind of chilling out a bit. Then it goes on a nice another, leg higher. So I think that's kind of what's going to happen there. Tesla's a shocking move here today, 6%. Not expecting that. Oh my gosh, it's going to be it's going to have to be a crazy day in the public count. Based upon some of these moves, this is going to have to be a big day in the public count. Big. Qualcomm, 6% mover here today. Honest, finally coming back to life a little bit. 5% move for Honest. 4% move for Avant Brands here today, my small cap, which it's sad to me because Avant reported such freaking great numbers. In my opinion, the progress that company's made over the last 12 months has been pretty shocking, and just no one cares. It's just a small little company no one cares about, so that's unfortunate. Wynn Resorts, big move up. Oh, Planet just moved up 6%. That's interesting. The Elf earnings report was shocking. I mean, that company's clicking on all cylinders. They want to give me free freaking money. Give me the free money. Cake was, a slightly disappointing earnings, I thought, from Cake. So I'm not surprised the stock's down 2% here today. Revolve, kind of surprising to see Revolve only down 2%, but maybe, just maybe. And remember, guys, dang, somebody cleaned up some money in regards to Revolve. Revolve was down over 16% after hours. If somebody went in and scraped up some Revolve shares after hours yesterday, they just made themselves a quick 14%. A quick 14% less than 24 hours. Yeah, that's pretty darn impressive. A little clean out there. Texas Roadhouse down slightly today. Meta is going to cause a little confusion in the public count because it is the biggest, stock. Here's the earnings we got after the bell here. We have Apple. We have Square, which is obviously, you can say, somewhat of a competitor to PayPal. We have DraftKings and Carvana. Those are two stocks that probably will make huge moves either direction. Starbucks, Coinbase, Cloudflare could be one that makes a huge move as well in either direction. And then tomorrow, obviously, Fubo. We got to get back here. So that's Kathy Wood watch list there. Potential hedges. I mean, if we got a huge move up in the NASDAQ into year end, okay. If we got a huge move up into year end for tech, like let's just say hypothetically, these Qs go up 5 to 10% between now and the end of the year. There's a potential I could make a move on SQQQ as a hedge for next year, assuming we have a 5 to 10% type move in the Qs into year end, which is always a potential. It's honestly a potential. A lot of people are very bullish going into the end of the year. Santa Claus rally, all that talk, right? So let's see the travel watch list here today. Hawaiian Airlines, huge move up. Yeah, big move up. Oobity Booba stock up 6%. CCL up about 5% here today. Southwest Airlines up 3.6%. Only stock that's Red Dead Redemption on the travel watch list is Airbnb. Jeremy, is it worth buying Toll Brothers hedge right now? It depends on so many different factors. What's your risk tolerance? Are you even somebody that can consider hedging? Hedging is not even for everybody, by the way. Like hedging's, if you have like a bigger portfolio, you're really experienced in the market. And the reason it's not for everybody is because then you have to understand kind of risk reward profiles, when to take the hedges off the table, those chips. It's a complicated process, man. I don't think it's for most people unless you're super experienced. And if you're super experienced, you probably don't even want my opinion on if it's a proper hedge or not. We're in that time period. We're now in November, right? November, December. A lot of good vibes in the economy, a lot of spending, a lot of families getting together, a lot of people going to restaurants, all that stuff. So, sometimes it can give you a little bit of a fake illusion of what could actually be going on in the economy. So do keep that in mind. So, I don't see a day like today and say we've won and it's just skyrocketing into the moon from here necessarily, right? Somebody say Airbnb thoughts. They're got a lot to work through in the short term. Obviously, a company's very impressive in what they're doing and the financials there, but they've got a lot of cities that are starting to limit Airbnb, and I don't know. It's just a little bit of It's a complicated stock. It's actually a very much more complicated stock than a lot of people kind of realize, in my opinion. So, thoughts on Apple, up or down? I mean, I don't think their earnings are going to be great. I think they're either going to I think they're probably going to either slightly beat or slightly miss. That's my guess in regards to Apple's earnings. I don't think it's going to be something shocking either way. If it is, then that would be very surprising. If they reported some phenomenal numbers and their revenue growth was far exceeding what they were supposed to do in their earnings per share, I'd be shocked. And by the way, in regards to what analysts are expecting in regards to Apple here, analysts are expecting earnings estimates quarterly. Analysts are expecting about 8% EPS growth. Wow, analysts have some pretty strong expectations for EPS growth. I'm actually surprised. And they're expecting revenue to be down, let's call it roughly 1%, okay, in regards to Apple here, going into these earnings. So, yeah, let me pull back up my stocks watch list here. So we can kind of keep track of everything. Palantir is an interesting one here today. All right, so where's that in the chat here? Do you have a price in mind for PayPal that would be your stopping point for buying shares? No, certainly not. I'm going to stop buying shares at some point in the first quarter of 2024, and that's because by then I'll have my position fully built out in regards to PayPal. But no, I mean, PayPal's so far away from any price I would consider like stop buying it. Like, no, I'm going to keep buying that baby all the way till first quarter, and then I'll stop at some point in the first quarter, and then that will be that. My position will be built out, and then from there it will just be a hold for me. At least in the public count. Probably in the Patreon portfolio too. Yeah, Patreon portfolio, I'm already overexposed to PayPal, to be honest. So, yeah. I mean, I'm technically not overexposed. I mean, I could buy PayPal. I could buy PayPal technically in the public count for like 2 years straight. The positions are so big in the public count at the top that like I could buy PayPal for a long time and it still wouldn't be an overweight position because Meta is so massive and going to get a lot more massive as that stock goes up over the next few years. Tesla, once that stock starts coming back, likely at some point in 2024, and I'm talking about a real comeback, not like these little fake rallies it does here and there. Like even today, I'm not convinced any of what's going on in price action on Tesla short term is real. To be honest, you know, Tesla's a volatile stock. I mean, that one could be right back under 200 before you know it. So when Tesla does have its next big run, which will probably start at some point in 2024, and I'm talking about a real run, not a fake out, that one will become a much bigger weight in there as well. Palantir continues to climb in the public count. That one's up to, you know, roughly $100,000 position now. That's still really small if you compare it to Tesla and stocks like Meta. Meta's over $500,000, right? Somebody said, Jeremy, how do you determine when a position is fully built? A lot comes down to how big the portfolio is, how big that position is in the portfolio. How risky is that stock? Like, you know, obviously it's an unprofitable stock, then it's a huge risk. If it's not unprofitable, but maybe their business is deteriorating in the short term, that's a higher risk, right? So a lot comes down to the risk reward there. Meta was an easy one because I could see how they could turn around their EPS very quickly, and they had a great balance sheet and like proven business model and those sorts of things. So, but that's what a lot comes down to, the risk reward there, and then saying, you know what, this is about enough for me to take. And sometimes you have to make a tough decision. You have to make a tough decision sometimes where it's like, you know what, I would love to own more of this stock, but this stock comes with this risk, and so you know I've got to just keep it where I'm at here. I think there's probably some institutional buying today in regards to Palantir. This move up today is not retail. This move up today smells more a big money type move, a 20% plus move. Palantir's market cap's not small anymore, folks. That market cap's grown a lot on Palantir now. Let's see, and then we'll come back to this Apple slide here. Palantir's market capitalization is now $31 billion, right? And so it might sound small if you compare it to like, that actually doesn't take into account today's move, if I recall. So today, you know, it might actually be pushing, you know, a $35 to $40 billion market cap Palantir right now, right? But, you know, today's move, that smells more like a big money move than a retail all loading up on Palantir shares. And looking at the way that stock's holding its gains today also smells like big money coming in that stock. Because look at the way it's just held its gains. It had that little sell-off earlier in the trading day and then just came back nice and strong and just holding gains through. So it almost feels like somebody just got orders in 1780 to maybe 1820, and they're just loading up, 1,000 shares, 10,000 shares, 5,000 shares. So I don't know. That's kind of my 2 cents in regards to that. I don't think this is retail pushing Palantir 20% here today. Let's put it like that, okay? After the bell, obviously all eyes are on Apple. We do have Square reporting as well. DraftKings and Carvana, those should be in. I'm looking forward to actually DraftKings and Carvana just for entertainment purposes. Those stocks are going to be inter-freaking-taining after the bell here when those ones report. Coinbase should be intriguing. Starbucks already reported, which was a weird situation why they were supposed to report. But anyways, Cloudflare is reporting, and I think we got a few other stocks that the Earnings Whispers doesn't have on here. So do keep that in mind. But yeah, we are literally minutes away from market close, about 3 minutes here at this point in time, folks. Oh yeah, it's coming. All right, folks, time to play the game before all these earnings start dropping any moment here. It's going to be earnings craziness. How much was the public count up or down today? Spoiler alert, it was a good day. It's for the public count here today, everybody. Getting your guesses. We'll see who's going to be the closest here today. All right, airdrop incoming, folks. Earnings are about to hit. Here comes the airdrop. We'll see who is correct. Honestly, I don't think there's been anybody even that close, to be honest. Alrighty, here's the number, folks. Here's the number. You ready? Here it is. It is $49,297. A public count was up today. So definitely a good day out there. I don't even think I saw anybody around 49. I saw a lot of like 42s. All right, somebody said, I guess they said 48K. So,
we're actually seeing opportunities across the board. I'd say the one big wild card is the geopolitical situation in the Middle East. I would say a month ago, I was probably more constructive than I am today. Just, I'm not sure what's going to happen in the Middle East and the contagion effects. But
wow, folks, what a move for Square stock. Absolutely incredible. I mean, that stock is smoking up. Almost 18% mover now. 18.5% Square. Oh my word. Whoa, what a mover. Holy smokes. And remember, that's after a 7% move today. Ho, 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 ho. Ho, ho, ho. Merry Christmas. Oh my goodness. Folks, we are only minutes away, about 7 minutes away from Apple numbers coming out. We're going to react to all those Apple earnings, obviously, that are coming out. Then we're going to go straight into the conference call after that, because then their conference call comes out shortly after their numbers come out. So, yeah, it's going to be a crazy next bit of time. Make sure you're subscribed if you're not subscribed. That way Twitch doesn't show you a million ads here. And, yeah, if you have Amazon Prime, you get a free subscription, folks. So make sure you do that. 3 minutes from Apple, folks. 3 minutes from Apple. Make sure you got your subscriptions in if you're not already subscribed here. 3 minutes, folks. Then after that, we're going to listen to our full conference call, react to that. Oh, man, this is going to be a fun time. So numbers to keep in mind here when these Apple numbers come out in a few minutes is EPS 139. Keep that number in your mind. 139. That is what Apple needs to beat. As far as next quarter, 208. Keep that number in mind as well. 208. Those are very important because they're going to likely not only basically say what this quarter was, but next quarter as well. 139, 208. 139, 208. Okay. On top of that, they need to do basically let's call it 90. If they do 90 billion or more, it's a win for them in terms of revenue for this past quarter. And then for next quarter, they need to guide for let's call it 122.5 or more. Okay. That would be a win for Apple. So keep those numbers in mind. I just read off there. That's what we're going to need to pay attention to when those numbers hit literally in a matter of a few minutes here. Let's see. There's nothing going on with the stock going into this earnings here in the next 2 minutes. Look at this. It's completely flat, which means nobody's really confident or unconfident in this last little bit of time here before they report. And at the end of the day, If you want to get out of Apple, like today was your opportunity, really. The stock's come back very nicely the past few days. This is a 5-day on Apple. I mean, 167 right there, 177 now. If you wanted to get out of this baby, you had your chance to get out of this baby. Bottom line in regards to that. So now, if you're holding into this, last look before, look at Square smoking, 18% move for Square. Live Nation, 3.5% up. Skyworks, 5% down. Coinbase, 3% down. DraftKings, 8% up. Carvana, 10% up for Carvana. Wow. Booking Holdings down 5%, down $138 a share. Apple's flat numbers about to come out. Expedia up 8.5% here. Woo, baby. Oh, yeah. And by the way, Skyworks, they supposedly gave a light guide, which is not going to be good news for Apple. How you Apple shareholders feeling? You feeling confident? You feeling not confident? Well, how you guys feeling, baby? Here it is. It's about to come for you. What are you guys feeling?
December, the expectations are going to be key to watch for.
Alex, are there any softer areas outside of the product numbers that you think are particularly important here? Trying to look through the geographies, for example.
Well, look, I think that the fact that they beat on services is huge for them. Now, of course, we're looking at, talk about softness, 4 straight quarters of revenue decline. That's not even growth decline, that's decline. And you need something to make up for that. So you look at services, right?
Okay, Apple's starting to turn red here, folks. I'm rolling my eyes because the very first paragraph Tim Cook's talking about, he's talking about carbon neutral Apple Watch, our milestone in our efforts to make all Apple products carbon neutral by 2030. It's just, oh gosh, it's like they're trying too hard, man.
And the call to really, put my finger down on what we can expect regionally.
Okay, well, let's get back to Steve Kovac for more on Apple results. Steve.
Yeah, I talked to Tim Cook, Morgan, about these results, and we went over just some of the demand and some of these issues the guests were just talking about here. So let's just dive into what he told me about the iPhone business, which of course came in $43.81 billion. That's up 3%. From the year-ago quarter. Here's what Tim Cook told me about the iPhone 15 launch, which we got about 8 days or 9 days of sales for this quarter. He's telling me, quote, we launched the new iPhone 15 family during the quarter. It's the best product lineup we've ever had for the iPhone, and we're excited to get those in the hands of customers as quickly as possible. It's still early, and the iPhone 15 Pro and 15 Pro Max are still constrained. That's key, guys, and we're working hard to get those out there as quickly as possible. Also followed up with Tim on that and Mr. Cook on that and asked him a little bit about the mix of iPhones and things he's seeing there. Wouldn't really talk too much about that or competition, about Huawei, just reiterating a strong quarter, strong demand for the iPhone 15, and that those constraints they're seeing right now for those Pro phones, which are more important, more expensive, also telling me those constraints are due to just high demand for the products that they just can't fulfill yet. So that's kind of a good problem to have for Apple. And then I do want to dive into the Mac business as well. Talk to Cook a little bit about that. It's down 34%, guys, to $7.61 billion. That's due to some wonky comps after some production problems throughout the year they had in China last year. Here's what he told me about that business, though. Some optimism about the holiday quarter for Mac, telling me, quote, I think the Mac is going to have a significantly better quarter in Q1 in the December quarter. We've got the M3s, those are the new chips he launched. We've got the new products. We don't have the compare phenomenon on a year-over-year basis, so I think it'll be significantly better. So, guys, a little bit more optimism for the holiday quarter, at least for the Mac side. But like the guests were saying just now, wait for the call to get some revenue guidance.
Yeah, the call is going to be what's important. The call is what's really important. If you want to know what's going to really shake Apple stock, it's going to be this conference call we're going to listen to. Because on there, the analysts are going to push them around and ask them very specific questions on what's actually going on here. Because Cook can say, this and that. And also, the whole supply constraint. Okay, if iPhone 15 is really selling like all that, why did Skyworks just come in with a light guide? Sometimes I'm thinking, are you guys really telling the truth about this whole constrained supply and all this? If Skyworks comes in and says, next quarter is not all that, I think that, Skyworks gets a huge component of their revenue from Apple. I think that matters.
Slightly weaker, right? It's down, I think, 2.5–3% year over year. That might be something worth digging into with them over time is demand trend. While they're good in iPhones broadly, are they holding up in China or what you folks were talking about is the Huawei issue starting to pop up a bit more over there. So that's the one thing I would say that stands out is China looks slightly weaker on a year-over-year basis versus the headline numbers are.
Yeah, I was looking at the same thing. North America, or Americas, geographically actually got stronger year over year. China weaker. Europe was just about in line. Also, Alex, when I look at how the different segments lined up.
Okay, so let's go through these numbers here, folks. Okay, so let's be very clear about this. Apple's product business is in not a good place. Okay, if we really want to tell the truth, let's tell the truth. Okay, here's the truth. In this same quarter last year, they did nearly $71 billion of revenue from products. In this quarter, they just reported they did $67.1 billion in product revenue, right? I don't know, last time I checked, that's down nearly $4 billion year over year for their product category, right? Now, services is strong. Services was $19.1 billion the same quarter last year, and they did $22.3 billion in this quarter they just reported, right? So total net sales are still down over $500 million year over year, right? So Apple is technically a declining business right now, and I think that matters, right? And now this is several quarters where we've seen Apple's actually a declining business. Now, they can, hype it out and talk about, we're going to hear what they have to say on this conference call here in just a bit, and we'll react to this live. But, they can say, oh, we got this going on, we got that going on. But at the end of the day, this is now several quarters in a row where this is a declining business. Cost of sales, they brought that way down for cost of sales. But do keep in mind, part of that's because their net sales were also down. Services was up, but they wasn't up nearly as much as obviously the revenue was up. So total cost of sales came in at $49 billion versus $52 in the same quarter last year. Gross margin for Apple came to about $40.4 billion of gross margin dollars versus $38 billion the same quarter last year. R&D, research and development, we know Apple's always going to spend more and more on R&D, right? You have to as a tech company. That's your future. $7.3 billion versus $6.7 billion same quarter last year. Selling general administrative, they actually brought that number significantly down year over year. I don't know how they pulled that rabbit out of the hat. I'll be honest with you guys. I do not know how they pulled that rabbit out of the hat. They did $6.1 billion SG&A. I don't know how they did that. They didn't even have any big firings or anything like that. That's actually somewhat shocking. Unless they weren't giving out some bonuses or something. I don't know, man. That's weird. I don't know how they brought that number down. They pulled a rabbit out of the freaking hat there, okay? Operating income came in at $26.9 billion for the company versus $24.8 billion the same quarter last year. Net income for the company came in at nearly $23 billion versus $20.7, right? So we have a diverging business. We have a business that on the bottom line looks great. We have a business that on the top line looks extremely troubling, especially with products. Remember, products is going to be iPhones, Macs, iPads, Apple Watches. That's what all that category is. And to be down nearly $4 billion year over year is something to just kind of pay attention to, right? Now, Americas was actually up for the company year over year. Europe was slightly down for the company year over year. China was down about $400 million roughly year over year. Japan was down. Did I just read that right? Every single market other than the Americas is down for Apple year over year? Whoa. Wow. Every single region other than the Americas is down for Apple year over year. That's crazy. Wow. Okay. iPhone was actually up for the company year over year. $43.8 billion in iPhone. So iPhone was up and the Mac business was that bad? Oh my gosh. The Mac business is in a disaster right now. $7.6 billion of revenue versus $11.5 billion in the same quarter last year. The Mac business is in trouble. Now, they do have the new Macs out, but I'm not going to be getting one. If they had upped their camera game and microphone game, I'd gladly get a new MacBook Pro, but they didn't. It's the same as it's been. So that, for me, I'm like, my MacBook Pro is plenty fast. I don't need it any faster than it already is. It's plenty fast. So I'm not going to go buy a new Mac. So they missed out on an opportunity to win me. If they'd put a better camera, a better microphone, I would have got it instantly. Literally, I would have ordered it as soon as I could order it. But now I'm not going to order it because it's literally the same camera, same mics. So it's no help to me. iPad business was down for the company. Surprisingly, wearables business is down. You'd think with Apple Watch, I don't know. That's a little surprising. So, but services is really saving this company right now. Let's be very clear about it. It used to be viewed as services side for Apple business model is a thing that's helping the company. Now it's the thing that's saving the company. There's a big difference. Services is things like iCloud, people buying games and Apple Music and all those sorts of things. Wow. Cash and cash equivalents for the company, $29 billion. Where's all their money? Seems like a low number. $29 billion in cash and cash equivalents, $31 billion in marketable securities, and then looks like long-term marketable securities of $100 billion there. They got, looks like about $10 billion in short-term debt roughly, and then longer-term debt, it looks like about $95 billion in longer-term debt. So Apple's balance sheet, guys, is slowly getting worse. Over the past I've tracked Apple since I basically got in the market 15 years ago, but I've watched Apple's balance sheet slowly deteriorate over the last, I would say, 5 to 10 years. Because they're doing so many buybacks and they take on a lot of debt and different things for that. I mean, look at their balance sheet. They had $352 billion of total assets, but now they're up to $290 billion in total liabilities, folks. Apple, the biggest company in the world, folks, okay? The biggest market cap, the big dog of them all, bigger than everybody else, bigger than Microsoft, bigger than Meta, bigger than Amazon, bigger than everybody. Only $62 billion in shareholder equity on Apple now. Why is no one talking about that? We got a nearly $3 trillion market cap with $62 billion of shareholder equity? What the hell is going on? What the hell is going on? I don't know how that's not talked about. I'll be completely honest with you guys. I think that should be talked about. We got the conference call coming up here in about 15 minutes. I can't wait to hear this conference call. I can't freaking wait to hear this conference call. Oh, man. So this website I'm showing you right here, guys, in front of you, GGR Asia. I love this website to kind of understand what's going on in Macau. They're always on top of what's going on in Macau. Also, Philippines, Singapore, other places, but really from Macau. I have obviously owned Wynn Resorts on and off for many, many years. I own Wynn Resorts right now. It is a stock I'm actively buying. And they'll kind of let you know what's going on. Obviously, I don't live in freaking China, so I live in Vegas, so I don't have an opinion on what's going on over there. So it's very important I get intel on what's going on. GGR Asia has that. Macau's October casino gross gaming revenue was up 30.6% month on month at, let's call it about $2.42 billion. Said Wednesday the local regulator, the Gaming Inspection and Coordination Board. It was the best monthly performance since January 2020. At the very beginning of COVID Rona, when the city's GGR stood at about 22.13 MOP. Brokerage JP Morgan Securities Asia Pacific said on Wednesday memo that October GGR, as well as being the highest print in 45 months, also comfortably beat market's consensus of 19.2, a figure that had already been revised from a month earlier estimate. Analysts basically suggests mass GGR finally recovered beyond pre-Rona levels. Mass GGR just means kind of like, think of it as like the middle class in China, okay, not VIP, to 105% of October 2019. So now things have strengthened so quickly in Macau this year that now things are actually stronger right now than they were where they were in October 2019. That's impressive. They also note that performance has been underpinned by a robust Golden Week. The first 6 days of October formed part of the 8-day autumn Golden Week holiday in mainland China. In September, Macau GGR fell 13.2% month on month, following August GGR of a much better number, right? October tally was up 400% from a year ago, in a period when COVID-related travel restrictions were still in place. So Macau is coming back extremely strong, which is very bullish for Wynn Resorts. Obviously, Wynn Resorts also very bullish that we have in Vegas the F1 race, which a lot of big money's coming to Vegas in November. A lot of big money's coming to Vegas in November because at F1 race, there's going to be a lot of money spent at the Wynn. And then we have the Super Bowl, so a lot more big money's coming to Vegas when the Super Bowl comes here, which is going to be in February. So, I mean, that's, you know, so in regards to China specifically, clearly there's money to be spent out there. There's money being spent, right? We're about 10 minutes away from this Apple conference call, which I cannot freaking wait. Okay, so let's see what's going on. All right, Apple call is about to start. Let's get logged in here. We're starting in 1 minute, 1 minute Apple call.
Now, when darkness seems
Okay.
to end.
Okay, I guess that's Apple's vibe. We're going to put some of that on. I guess that's Apple's vibe. Alrighty, folks. So the stock is doing a whole lot of nothing going into the call. Everybody's waiting on this call, man. Here we go.
Thank you. Good afternoon, and thank you for joining us. Speaking first today is Apple CEO Tim Cook, and he'll be followed by CFO Luca Maestri. After that, we'll open the call to questions from analysts. Please note that some of the information you'll hear during our discussion today will consist of forward-looking statements, including, without limitation, those regarding revenue, gross margin, operating expenses, other income and expense, taxes, capital allocation, and future business outlook, including the potential impact of macroeconomic conditions on the company's business and results of operations.
Setting a September quarter record, as well as quarterly records in many markets, including China mainland, Latin America, the Middle East, South Asia, and an all-time record in India. In services, we set an all-time revenue record with double-digit growth and ahead of our expectations. During the September quarter, we continued to face an uneven macroeconomic environment, including foreign exchange headwinds, and we've navigated these challenges by following the same principles that have always guided us. We've continued to invest in the future and manage for the long term. We've adapted continuously to circumstances beyond our control while being thoughtful and deliberate on spending. And we've carved a path of groundbreaking innovations and delivered with excellence every step of the way. That includes Apple Vision Pro, which has gotten such an amazing response from developers who are currently creating truly incredible apps. We're excited to get this magical product in the hands of customers early next year. Now let me share more about our products, beginning with iPhone. iPhone revenue came in at $43.8 billion, 3% higher than a year ago, and a new record for the September quarter. This fall, we were thrilled to debut the iPhone 15 lineup. The all-new iPhone 15 and iPhone 15 Plus feature a gorgeous design, powerful cameras, and the intuitive dynamic island.
As we reach all-time revenue records in the Americas, Europe, and rest of Asia Pacific, and a September quarter record in Greater China. We also set new records in every services category. Company gross margin set a September quarter record at 45.2%, up 70 basis points sequentially, driven by leverage and favorable mix, partially offset by foreign exchange. Products gross margin was 36.6%, up 120 basis points sequentially, also driven by leverage and mix, partially offset by foreign exchange. Services gross margin was 70.9%, up 40 basis points from last quarter due to a different mix. Operating expenses of $13.5 billion were at the low end of the guidance range we provided, up 2% year over year. Net income was $23 billion. Diluted earnings per share was $1.46, up 13% versus last year, and a September quarter record. And operating cash flow was strong at $21.6 billion. Let me now provide more detail for each of our revenue categories. iPhone revenue was $43.8 billion, up 3% year over year, and a new September quarter record. We had strong performance in several markets, including an all-time record in India and September quarter records in Canada, Latin America, the Middle East, and South Asia. Our iPhone active install base grew to a new all-time high, and fiscal 2023 was another record year for switchers. We continue to see extremely high levels of customer satisfaction, which 451 Research recently measured at 98% in the US. Mac revenue was $7.6 billion, down 34% year over year, driven by challenging market conditions and compounded by a difficult compare in our own business, whereby last year we experienced supply disruptions from factory shutdowns in the June quarter and were subsequently able to fulfill significant pent-up demand during the September quarter. We also had a difference in launch timing, with the MacBook Air launching earlier this year in the June quarter compared to the September quarter last year. We have great confidence in our Mac lineup and are excited about the recently announced iMac and MacBook Pro powered by our M3 chips. Our install base is at an all-time high, and half of Mac buyers during the quarter were new to the product, driven by MacBook Air. Also, we saw reported customer satisfaction of 97% for Mac in the US. iPad generated $6.4 billion in revenue, down 10% year over year. Similar to Mac, these results were a function of a difficult compare from the supply disruptions in the June quarter a year ago and the subsequent fulfillment of pent-up demand in the September quarter. iPad continues to attract a large number of new customers to the install base, with over half of the customers who purchased iPads during the quarter being new to the product. And the latest reports from 451 Research indicate customer satisfaction of 98% in the US. Wearables, home, and accessories revenue was $9.3 billion, down 3% year over year. We had a September quarter record in Europe, and we saw strong performance in several emerging markets around the world. Apple Watch continues to expand its reach, with nearly two-thirds of customers purchasing an Apple Watch during the quarter being new to the product. And customer satisfaction for the watch was recently measured at 97% in the US. Services had a great quarter. We reached a new all-time revenue record of $22.3 billion, up 16% year over year, each reaching a new all-time high. Also, our paid subscriptions showed strong growth. We have well over 1 billion paid subscriptions across the services on our platform, nearly double the number we had only 3 years ago. And finally, we continue to improve the breadth and quality of our current services, from exciting new content on Apple TV Plus and Apple Arcade to additional storage tiers on iCloud. We believe our customers will love these new offerings. Turning to enterprise, we are excited to see our business customers in both developed and emerging markets expand their deployment of Apple products and technologies to drive business innovation and employee satisfaction. Starbucks continues to invest in Apple technology to bring the best experience to the customers and employees, including tens of thousands of iPads across all retail stores to help their teams streamline order management, operations, and training. In addition, Starbucks recently refreshed over 10,000 Macs to the latest M2-powered MacBook Air for all store managers, enabling them to do their best work and improve productivity. And in Indonesia, popular technology company GoTo is offering Mac as a choice so that employees can have the best tools to be most productive. Today, more than half of its workforce are already choosing Mac for work. Let me now turn to our cash position and capital return program. We ended the quarter with over $162 billion in cash and marketable securities. We increased commercial paper by $2 billion, leaving us with total debt of $111 billion. As a result, net cash was $51 billion at the end of the quarter, and our goal of becoming net cash neutral over time remains unchanged. During the quarter, we returned nearly $25 billion to shareholders, including $3.8 billion in dividends and equivalents, and $15.5 billion through open market repurchases of 85 million Apple shares. We also began a $5 billion accelerated share repurchase program in August, resulting in the initial delivery and retirement of 22 million shares. Taking a step back as we close our 2023 fiscal year, our annual revenue was $383 billion. While it was down 3% from the prior year, it grew on a constant currency basis despite a volatile and uneven macroeconomic environment. Our year-over-year revenue performance improved each quarter as we went through the year, and so did our earnings per share performance as we reported double-digit EPS growth in the September quarter. We are particularly pleased with our performance in emerging markets, with revenue reaching an all-time record in fiscal 2023 and double-digit growth in constant currency. We are expanding our direct presence in these markets from new Apple retail stores in India to from the September quarter. We expect the year-over-year revenue performance for both iPad and wearables, home and accessories to decelerate significantly from the September quarter due to a different timing of product launches.
That's a weak guide,
On
guys.
iPad, we launched a new iPad Pro and iPad 10th generation during the December quarter a year ago. For the wearables category, last year we had the full December quarter benefit from the launches of the AirPods Pro 2nd generation, the Watch SE, and the first Watch Ultra.
The guide's not good.
For our services business, we expect the average revenue per week to grow at a similar strong double-digit rate as it did during the September quarter. We expect gross margin to be between 45 and 46%. We expect OPEX to be between $14.4 billion and $14.6 billion. We expect OI&E to be around negative $200 million, excluding any potential impact from the mark-to-market of minority investments, and our tax rate to be around 16%. Finally, today our board of directors has declared a cash dividend of 24 cents per share of common stock payable on November 16, 2023 to shareholders of record as of November 13, 2023.
Yep, I'm not surprised.
With that, let's open the call to questions.
When he before that guy, he was only down 1%.
We ask that you limit yourself to 2 questions.
Folks,
Operator, may we have the first question,
that guide's
please?
weak. He said flattish year over year. It's about the same.
We'll go ahead and take our first question.
They were expecting 4.5% growth. It's a weak guide.
Please go
That's
ahead.
not good. It's bad.
Hey, good afternoon. Thank you very much for the question. I just have a question on iPhone storage and demand versus iCloud. As demand for storage grows, are you seeing a mix shift towards higher storage iPhone models, or are consumers mostly opting for the same because of increased uptake of iCloud Plus? What are some of the strategic and financial considerations here and trade-offs as you think about the mix shift towards higher storage models versus iCloud penetration? Thanks.
Michael, it's Tim. We, as you probably know, we started the line with the iPhone Pro Max at 256, and so we are seeing a different mix, if you will, this year than last year. Outside of that, not significant changes.
Fuck this. We're fucking listening to Palantir conference call. Let's go, baby. I haven't listened to Palantir conference call yet. We're going to listen to it live on here. Here we go. I have not listened to it yet. This must have been some huge things that happened in that Palantir conference call because, that stock went skyrocket mode, obviously, after the conference call. Something had to happen in this conference call. All right, here we grow. If we have volume, that is. We might not.
Good morning. I'm Anna Sara from Palantir's finance team, and I'd like to welcome you to our third quarter 2023 earnings call. We'll be discussing the results announced in our press release issued before the market opened and posted on our investor relations website. During the call,
everybody tell a friend to tell a friend. Palantir conference call. We're reacting to it right now on
we will
here.
make statements regarding our business.
Tell a friend to tell a friend.
Within applicable securities laws, including statements regarding our fourth quarter and fiscal 2023 results, management's expectations for our future financial and operational performance, and other statements regarding our plans, prospects, and expectations. These statements are not promises or guarantees and are subject to risks and uncertainties, which would cause them to differ materially from actual results. Information concerning those risks is available in our earnings press release distributed before the market opened today and in our SEC filings. We undertake no obligation to update forward-looking statements except as required by law. Further, during the course of today's call, we will refer to certain adjusted financial measures. These non-GAAP financial measures should be considered in addition to, not as a substitute for, or in isolation from, GAAP measures. Additional information about these non-GAAP measures, including reconciliation of non-GAAP to comparable GAAP measures, is included in our press release and investor presentation provided today. Our press release, investor presentation, and SEC filings are available on our investor relations website at investors.palantir.com. Over the course of the call, we will refer to various growth rates when discussing our business. These rates reflect year-over-year comparisons unless otherwise stated. Joining me on today's call are Alex Karp, Chief Executive Officer, Shyam Sankar, Chief Technology Officer, Dave Glazer, Chief Financial Officer, and Ryan Taylor, Chief Revenue Officer and Chief Legal Officer. I'll now turn it over to Ryan to start the call.
We are pleased to report that our company achieved GAAP profitability for the fourth consecutive quarter, and we continue to drive strong results across our company. In Q3, we closed 80 deals of $1 million or more across 30 industries, 29 deals of $5 million or more across 16 industries, and 12 deals of $10 million or more across 11 industries. Our U.S. commercial business accelerated last quarter, growing 33%.
On the call, we will refer to various growth rates when discussing our business. These rates reflect year-over-year comparisons unless otherwise stated. Joining me on today's call are Alex Karp, Chief Executive Officer, Shyam Sankar, Chief Technology Officer, Dave Glazer, Chief Financial Officer, and Ryan Taylor, Chief Revenue Officer and Chief Legal Officer. I'll now turn it over to Ryan to start the call.
We are pleased to report that our company achieved GAAP profitability for the fourth consecutive quarter, and we continue to drive strong results across our company. In Q3, we closed 80 deals of $1 million or more across 30 industries, 29 deals of $5 million or more across 16 industries, and 12 deals of $10 million or more across 11 industries.
LLMs are statistics, not calculus. It's more like predicting the weather than predicting an eclipse, and that's why we're focused on proof, not proofs of concept. AIP gives our customers the infrastructure they actually need to ship production use cases quickly. This difference has been so profound that we shifted the entire commercial organization to focus on 1 to 5 day long customer boot camps, where organizations exit with a scalable use case on their actual data that they built for themselves. Customers leave so excited with this definite, optimistic view of what can be accomplished and how they'll drive transformation in their organizations. And these boot camps have created enormous tailwinds with IT attendees for 2 reasons. First, we're defining the most advanced and valuable reference architecture for Gen AI in the enterprise. And second, with the release of virtual tables and Foundry, IT's primary objection of data duplication is eliminated. We're running more boot camps per month than we had US commercial pilots all last year. These boot camps really allow the customer to experience 3 magic moments for themselves. First, that you really can't use LLMs without tools, that elegant integration of algorithmic reasoning to unlock the full potential. Second, that the object, in other words, the rich representation of your enterprise and its state, and not chat, is the prompt. Or said differently, the bootcamp experience enables them to transcend chat. And finally, the power of live integration of expert feedback through the AIP infrastructure to efficiently generate adaptive models. At the end of the bootcamp, customers say things like, once you see it, you can't unsee it. As Ryan mentioned, it's common to hear attendees express that they could do in days what they couldn't previously with other AI technologies in months. In September, we also launched Palantir Government Web Services to expand Palantir's
back of our U.S. commercial business, driven by our intense focus on AIP, while margins continued to expand, demonstrating the transforming unit economics of our business. We beat the high end of our guidance range on both top line and bottom line, and increased our Rule of 40 score 800 basis points quarter over quarter to 46, while simultaneously delivering our 4th consecutive quarter of GAAP profitability, the first time ever that we are GAAP profitable on a trailing 12-month basis.
This is Palantir's income statement. It was an A+.
GAAP operating profit
A+ income
and over
statement.
$500 million
Palantir.
in adjusted free cash flow over the last 4 quarters. Turning to our global top-line results. Third quarter revenue reaccelerated to $558 million, up 17% year over year and 5% sequentially, exceeding the high end of the range of our prior guidance. Excluding the impact of revenue from strategic commercial contracts, third quarter revenue grew 21% year over year and 6% sequentially. Revenue from our largest customers continues to expand. Trailing 12-month revenue per customer from our top 20 customers increased 13% year over year to $54 million per customer. Customer count grew 34% year over year and 8% sequentially to 453 customers as we remain focused on landing new accounts. Now moving to our commercial segment. Third quarter commercial revenue grew 23% year over year and 8% sequentially to $251 million. I'd like to congratulate the entire commercial org for reaching a $1 billion annualized run rate milestone this quarter. It's quite an achievement. Excluding the impact from strategic commercial contracts, commercial revenue grew 34% year over year and 11% sequentially. In the third quarter, U.S. commercial revenue re-accelerated to $116 million, up 33% year over year and 13% sequentially. Excluding revenue from strategic commercial contracts, U.S. commercial revenue grew 52% year over year and 19% sequentially. We continue to see the impact of our intense focus on AIP on our commercial business, both through the adoption of new customers and the expansion of opportunities at existing customers. We booked $252 million of U.S. commercial TCV, representing growth of 55% year over year on a dollar-weighted duration basis. Our U.S. commercial customer count grew to 181 customers, reflecting 37% growth year over year and 12% sequentially, benefiting from the increase in velocity of our AIP go-to-market motion. This represents a tenfold increase in U.S. commercial customer count from when we went public just 3 years ago. Our international commercial business was up 15% year over year and 4% sequentially to $134 million, as we continue to capitalize on targeted growth opportunities in Asia, the Middle East, and beyond, while conditions remain challenging in continental Europe. Revenue from strategic commercial contracts was $15 million, or 2.6% of quarterly revenue, down from $19 million in the prior quarter. We anticipate fourth quarter revenue from these customers to continue to decline to between $13 to $15 million, representing 2.3% of expected fourth quarter revenue. Shifting to our government segment, third quarter government revenue grew 12% year over year and 2% sequentially to $308 million. U.S. government revenue grew 10% year over year and 2% sequentially to $229 million. While it's hard to predict exactly when our government revenue will reconverge at historically high CAGRs, as Sean mentioned, our products, PG, Gaia, MetaConstellation, and AIP, are needed in battlefields across the world, and even more so in the current geopolitical landscape. International government revenue grew 21% year over year and 2% sequentially to $78 million, bolstered by our continued work in healthcare and defense. Moving to bookings, TCV booked was $830 million, up 29% sequentially. Net dollar retention was 107%, impacted primarily by headwinds from our commercial business in continental Europe. Net dollar retention does not include revenue from new customers that we acquired in the past 12 months and is therefore not reflective of the recent acceleration in our U.S. commercial business. We ended the third quarter with $3.7 billion in total remaining deal value and $988 million in remaining performance obligations. As a reminder, RPO is primarily comprised of our commercial business, as it does not take into account contracts with an initial term of less.
You guys are talking about Fubo expectations for morning. So they got a pretty easy number, in my opinion, for EPS to beat next quarter. If they do any sort of guidance, I wouldn't be surprised if they're ahead of what is expected there. And then as far as revenue goes, next quarter, analysts are only at about 18.5% revenue growth. I think they're going to be far outstripping that. I wouldn't be surprised if next quarter's 25% plus, to be honest. So, yeah, I think everybody's estimates are a little too low here in regards to Fubo. So, yeah.
9%, 400 basis points ahead of the high end of our prior guidance and marking the fourth consecutive quarter of expanding adjusted operating margins. Q3 adjusted expense was $395 million, down 1% sequentially and flat year over year. In short, we've been able to flatline expenses for 4 consecutive quarters while investing significantly in our products, including AIP, and re-accelerating our revenue. This drives home the efficiency and operating leverage of our software at scale. R&D adjusted expense was up 9% year over year and 11% sequentially, demonstrating our commitment to continuously drive forward product innovation and invest in technical talent. Over the past year, we have emphasized our unwavering dedication to sustain GAAP profitability and GAAP operating income. Our 4 consecutive quarters of improving GAAP operating income enable us to more aggressively invest in AIP. Looking ahead to the fourth quarter and beyond, we remain focused on calibrating expense growth below revenue growth, even as we increase investment and resourcing to AIP and in specific geographies around the world. In the third quarter, we generated GAAP operating income of $40 million, our third consecutive quarter of GAAP operating income. GAAP net income in each quarter of this year. With that, I'll turn it over to Alex for a few remarks.
Welcome. I don't think the camera's working. Welcome to our earnings. Obviously, current events and the performance of our business are an absolute validation of our strategy of building the world's most aligned and powerful enterprise products years, sometimes decades before they're needed, before you could imagine their power. AIP in U.S. commercial not only is disrupting the market, it's setting a standard that I don't believe any other software company will be able to reach, partly because they've misunderstood the value of LLMs and their relative importance and lack of importance, partly because they don't have decades of experience on the front line as we do in the military with managing the core ways in which you make these things precise, the way in which you provide governance. Also because the playbook backed by venture capitalists and supported by analysts has always been make the thinnest technology possible that is misaligned with your enterprise and hire the most and best salespeople so the enterprise gets moderate value while having its high revenue exported in a parasitic manner to the cheers of insiders and the pain of retail investors. And we obviously rejected that. And then on the mission side, we have been saying and building products for a world that is violent, disjointed, irrational, a world in which you have to show strength, a world in which if you do not show strength, people who are biased, xenophobic, dare I say anti-Semitic, will rear their head. A world in which you really have to pick sides. Palantir is the first major company to, in my view, to have said from the beginning a thing that is obviously true. There is no such thing anymore of being on all sides. Palantir only supplies its products to Western allies. We've never supplied our products to enemies. We proudly support the U.S. government. I am proud that we are supporting Israel in every way we can. And we also support plain English speaking. So when people are massacred to the equivalent of almost 50,000 people in Israel, we view it as a terror act. We call it terrorism. We supply our product to people who are fighting terrorism, and we have no problem with describing as it is or sticking up for our allies. And, and we don't provide false context. All of a sudden, you need a lot of context for describing what it means to kill Jews or persecute Jews across the world. I believe in context and where in places where you need to actually provide it. But at Palantir, we have seen that our view of the world, which is that there really are people that are violent and not in conformity with morality, need to be fought. And we are supplying these products that we've built over the last 20 years to our allies, and we are proud of the results. And I would say also even commercially, you are going to see that our alignment with our client, our alignment with our society pays major dividends. And for those of you who are along for the ride, we really celebrate you. And we are going to bring our warrior culture to our products, to our market fit, and the results of which we are going to bring to our allies.
With that, we'll begin with a few questions from our shareholders before we open up the call. Our first question is from Christopher. The current situation in Israel has opened the eyes of other allied countries around the globe. Specifically, are there current or future plans of supporting our allied partners in Asia with Palantir products?
Absolutely. The short answer is yes. I think not only can we look at Israel, but we can look even before that at Ukraine and the lessons that we've learned there. And I would distill that down simply to that you must pre-position data, software, and hardware well ahead of the fight there and create a partner mesh network of command and control nodes to really provide a difference here. So that's one major thing. And so we're spending a lot of our time and our energy thinking about how do we get as much mass west of the international date line as possible to be prepared to meet those moments. And make no mistake, there's a lot to be done there. The other lesson specific from Israel is how much faster you can move when you create a big tent tech ecosystem that allows you to bring a lot of other defense tech startups along with you. The capabilities that we were able to give the Israeli government by bringing in other Israeli startups as well as international startups was incredible. And that's a key lesson that we're taking forward with us as well. And it's embodied and enabled by Palantir Government Web Services.
Thanks, Sham. Our next question is from Sony. Congrats on well-executed AI boot camps delivering tangible value very quickly. Could you kindly attempt to synthesize the top 3 observations from those boot camps for enterprises to launch AI-enabled decision management systems to power forward their critical objectives?
Sure, I'll take a first stab at this. I would say, one, it's about the magic moments. So the first bit of this that I think people get out of it is, what does it viscerally mean to understand that you can't really use these LLMs without tools? So how do you bring that tool bench forward? 2, it's a realization that the semantics of your business ought to be the prompt. And we are uniquely positioned there because the best way to do that is to serialize those semantics into your ontology, to use the object model that we have to do that. And so
Which we've already built and deployed. One of the most interesting things about the commercial market is there are all these tools we built that basically not only allow you to manage LLMs, but they basically pen test your enterprise. So
it's LLMs, large language models, not LMNs.
Misaligned with your enterprise.
LLMs.
AI forces an alignment with your enterprise, and so you begin to ask really business relevant questions. And then because of essentially our ability to take the knowledge of your business and put it into the LLM and then extract from the LLM something relevant and then manage it, you get both the power of the LLM and you get the shock moment of the enterprise actually saying, wait a minute, you're providing me something that actually is good for my enterprise. Quite frankly, it's almost like taking an alcoholic off alcohol and saying, here's your health drink. And it's like, and the reason why it just is very, very hard to compete against that is because the other players in this space are actually built to take you away from what is good for your enterprise. How do you make better margins? How do you make your products more safer? How do you take the tacit knowledge of a Japanese manufacturing company and build in America with all the advantages of America and the tacit knowledge of Japanese manufacturing? Like, that's what we're actually doing with these things. And then there's all these things we've built that would take decades, years and years and years to build, even if you understood them, that we'd already built.
Our product applied against their data in real workflows. And so we're seeing the network effects of that. We're seeing customers who have used AIP in one context going to new companies, adopting it at new companies, and converting quickly. We're seeing customers that were with us years ago who are coming back to us because we have the product now that works for what they need. And we're seeing that in a way where they maybe tried to build themselves and failed, and they're now able to implement it effectively and quickly in that environment. And the vast kind of expansion and advancements of our products are showing that at our customers.
And one of the things that, I'm very bullish on the U.S. and quite frankly, a little bit less bullish in every place else. But one of the things that's amazing about the U.S. is people change jobs and people know how good our products are. And the minute they change their job, they call us. And some of the results, so if you disambiguate and normalize the results to take out SPACs, U.S. is growing 52% off of a large base, which is why I think we can accelerate it to a $1 billion run rate by 25. But it's because the dynamic, how dynamic America is, and people moving around taking the product, combined with our ability to execute in a new commercial motion that is just literally a game changer for how we go to market. And by the way, we always kind of neglect to mention this. It's also a game changer internally. Like culturally right now, partly because we're on the front line fighting what amounts to evil, partly because a lot of people don't agree with us, and those that do realize that they need to stand up and stand with us, and partly because we were right about what you should supply to U.S. commercial. It's just a really good vibe internally. It's like we're really, it's really fun to crush it. And quite frankly, it's occasionally fun to watch your, apparently perfect fake competitors deliver things that don't work, and to watch us walk in with our crazy show and deliver things that do.
Thank you. That concludes Q&A for today's call.
Okay, so it was a good call overall. Absolutely, these boot camps sound like a game changer for Palantir's business model, and that's what's extremely exciting, is being able to go from a customer's interested in Palantir to being able to actually convert and make that happen and do it in a lot faster time. Like, what that's going to mean for Palantir's business model for 2024 and beyond is freaking amazing. So that was definitely, I thought that was the overall highlight of the call. But obviously Palantir, they released an A+ income statement. The progress they made is absolutely tremendous. It was a good day for the public count overall. I'm a happy camper in regards to that, right? Apple's down about 3% after hours. You know, Tim Cook tried his best on that conference call, if we want to call it that. Palantir position's looking really good. Apple's report was a C+ in terms of their income statement overall there. But appreciate everybody joining me as always. See you guys Monday. Alrighty, guys, that wraps up for today. Like I said, unless Fubo's over 4 tomorrow, I will see you guys not tomorrow, Monday. Appreciate y'all. Video coming on the main channel. Much love and peace.